Silicon Valley Bank has collapsed and federal regulators have taken control.
Trying to stem any sort of contagion effect.
In March 2023, the largest banking collapse since 2008 occurred at Silicon Valley Bank. That led to a bank run that triggered the third biggest bank failure in U.S. history, Signature Bank, only 2 days later. News outlets everywhere feared that this was 2008 all over again. Was this a taste of what's to come for the economy? How does inflation tie in? And how will it affect real estate prices on Oahu moving forward? On today's episode of Who Needs News Now? Just watch YouTube. We'll be going over exactly that, starting with banking and ending with why safe investments are not what you think. The purpose of a bank is for two reasons: safe storage of cash and usage of that cash for loans. For the economy, it provides safety and economic growth for future business. The banking business sits in between those two reasons, generating profit from lending out other people's money while keeping enough liquid funds for typical withdrawals. The entire model relies on trust, which is why it's both highly regulated and backed by the government. When that trust is broken or perceived to be broken, clients take out their funds, the bank can't provide those funds without significant losses, and game over for the bank. We call that a bank run, happening in times of a recession sparked by fear, whether material or not. And like a stampede, one bank run leads to another, leading to more, leading to the entire system collapsing, which happened in 2008. The only way to stop those dominoes is by bringing back trust to the system. That's what the federal government did in record time never seen before. In the span of 1 weekend, they took over all the deposits from Silicon Valley Bank and Signature Bank, fully guaranteed about $300 billion in deposits, and established a bank term funding program for banks in need of liquid funds for the clients. But what they didn't do, like 2008, is bail out the banking businesses, with those banks going under and one affected bank, Credit Suisse, down nearly 90% from a year ago. Imagine if you thought investing in banks was safe and saw your $1 million investment in Credit Suisse drop to $100,000. Now, the overall economy isn't too different. There's natural cycles of boom and bust because of humans. And unfortunately, humans don't change. But you can if you like this video right now because of the education you're getting from watching my videos. Now, to restart the economy after a recession, interest rates lower to create economic growth. It's like cheap gas and low interest on your credit card. You'll drive more, go to places, and spend more. Then at some point, the economy, like you, gets high inflation because of everyone buying. If you don't change course, it turns into its own inflation spiral, and we call that Zimbabwe. To combat that, we increase interest rates to put the brakes on the economy. But the economy is a slow-moving train, and the brakes will need to be kept on for a long time for all of that momentum to actually slow. We've been braking hard on the economy since January 2022, and done it at the highest rate since the 1980s. Finally, that braking is showing on a consistent basis. The Consumer Price Index, a key measure used, peaked in June of 2022 at 9.1% increase yearly, has fallen ever since, and hasn't been under 5.3% since May of 2021. It's now at 5%. On a monthly basis, CPI is barely up at 0.1% compared to February and below the 0.3% expected. What that means for interest rates is that we're very close to the end of continued hikes. The Fed hiked the federal funds rate in March to 4.75 to 5%. And with CPI at 5%, we're now at a balanced scale. But it doesn't mean that interest rates will suddenly drop. It's been in the 6 to 7% range since September 2022 and more than likely will continue through the summer. Now, how have real estate prices on Oahu been since that last September? While dipping significantly going into the holidays, median sale prices for March 2023 have rebounded. Single-family home prices are 98% back to where they were last September, while condo prices are now 7% higher. every single forward-looking statistic shows a positive trend for prices, from days on market decreasing to percent of original list price received increasing, to new listings increasing, to pending sales increasing, while overall supply via active inventory is lowering. We've seemingly normalized the market balance between buyers and sellers via months' supply of active inventory in this high 6 to 7% interest rate environment. To me, the most surprising thing beyond all of these stats is what's happening on the individual level. A few of my buyers have been looking for over a year and haven't been able to find a home that they like, much less at the price they want it for. What it means for them is that the perfect home will never come, or the discount price they're looking for just simply isn't there. Data is simply the combined thoughts and actions of the entire set of buyers and sellers in the marketplace. And these few stories show why the data is acting the way it is. Hopefully you use these insights to benefit your own search. If prices on Oahu look to have bottomed and the worst is potentially over, when is the best time to buy? I hate to be the realtor that says, now is a great time to buy, but the data just shows that a broken clock is right sometimes, like right now. My receipts are right here if you don't believe me from months ago. Let me put investments in another way. Would you rather invest in the safe Credit Suisse banking play to lose 90%? Or a single-family home that's only 6% off its all-time high, or a condo that's already broken it? I'm certainly not giving you financial advice or telling you that the past data is a predictor of the future outcome. I'm just giving you the data to inform you and to make the best decision for you. My job is to help you implement that idea, and what better place to do it than paradise? Now, if a house isn't for you, no problem. You'll really want to get an idea of how development is reshaping the island, and you'll do it by checking out my latest video, A'ali'i, the most affordable luxury condo in the hottest new neighborhood in town. Otherwise, my contact is below.